Imagine a nation where everyday Americans feel the squeeze every day, where rising prices and a stagnant economy threaten the very fabric of our middle class. The U.S. economy isn't on track for a soft landing. It's spiraling into stagflation. Inflation is not easing. It is climbing steadily, fueled by soaring oil prices, global political instability, and outdated Federal Reserve models that are no longer able to respond to the reality of our economic conditions. In this turbulent environment, traditional monetary policies simply can't keep pace with the rapid changes, leaving us with a stark reality. The middle class is being crushed while the wealthy continue to get richer. Today, our economic narrative is one of conflict, consequence, and a call for action. Consider these stark figures. The national debt recently reached an astonishing $36.56 trillion, and projections warn that the debt-to-GDP ratio could exceed 200% by 2049. Such numbers echo the looming specter of a Japan-style depression, a prolonged period characterized by low growth, high debt, and persistent economic stagnation. As the government continues to print money in hopes of stabilizing the situation, it has become clear that the printed dollars cannot manufacture prosperity or real economic growth. The crisis is layered. Injecting trillions into the economy through quantitative easing might have padded balance sheets, but it has also deepened the structural vulnerabilities and widened the financial gap. Fiscal policies that once aimed to sustain growth now contribute to escalating deficits. We have witnessed policy missteps and over-reliance on market interventions that fail to address the core issues of mounting debt and faltering growth. Wage growth, in stark contrast to the spiraling costs of living, leaves many Americans facing an impossible choice between meeting daily expenses and planning for a secure future. For everyday investors, the challenge is clear. With the risk of hyperinflation on the horizon and conventional assets under siege, diversification is not just an option, it's a necessity. Relying solely on common stocks in an economy fraught with uncertainty is a dangerous gamble. Instead, consider a balanced strategy that includes safe havens. Assets such as gold, cash, real estate, and defensive stocks in sectors like energy and healthcare. Take, for instance, the modest yields offered by certificates of deposit. At around 5%, they prove that cash is gradually shedding its reputation as trash money. This period of economic uncertainty demands more than just passive hope. It compels each of us to act deliberately and intelligently. Think of your portfolio as a lifeboat in the stormy seas of the global market. A diversified portfolio has the potential to protect your wealth from the unexpected shocks that arise from rising inflation and an ever-increasing debt burden. As Wall Street continues to pin its hopes on rate cuts and optimistic forecasts, the reality is emerging that those promises fall far short of what our economy desperately needs. Yet, amidst the bleak statistics and alarming forecasts, there is an opportunity, a chance to recalibrate our approach and safeguard our future. By acknowledging that the current model of unchecked spending and misallocated monetary policy has pushed us to the brink, we can empower ourselves to take strategic measures. The simple act of diversification is a powerful tool. It allows us to create a buffer against economic instability and provides a path to resilience in these challenging times. As we stand at the crossroads of potential disaster and measured recovery, it is imperative to embrace a diversified investment strategy. Learn from the past, analyze the current crisis, and adapt your portfolio to include assets that not only shelter your capital, but also offer the potential for growth as the economy evolves. In these uncertain times, it's crucial for investors to diversify their portfolios with assets like gold, cash, real estate, and defensive sectors to mitigate risks. Prepare yourself, safeguard your future, and make wise, deliberate decisions, because the path to stability and prosperity begins with a well-protected portfolio.